Welcome to our CPI session. We're going to take a look specifically at the Consumer Price Index, the CPI. Why do we care about what this number is ultimately going to be? Because the Fed does. Do they care about it as much as the PCE? Probably not. But when we think about those important economic data releases, these hot zones, what is a hot zone? High impact, high volatility, high volume, but most especially it's a scheduled event. So we know it's coming, we've prepared for it, and there's going to be a concentrated amount of attention on it, and we want to take advantage of it. Now, if you join me for the non-farm payroll session, same thing. The hot zone names change, the strategy doesn't. We stay steady while the market is going to go do whatever it is it's going to do, right, as it releases the Kraken. Couple things that I'm going to do before the hot zone. And as always, if you have any questions, type them on in. I will take a look at them. But at 8:30, what we're going to have is a plan. And either price reaches our level, the levels that we want to see reached, or it simply doesn't. Okay. And so I'm going to head on over to Estimize. All right, here we go. No, that's not Estimize. Where is it? I know I have this here somewhere. There we go. We're going to head on over to Estimize. Sorry for the brightness there. This is my favorite site for earnings whisper numbers and even economic data whisper numbers. And what we have is a consensus. This is a whisper number for the data. There's whisper numbers for everything, by the way, gang. There's the number that we have sort of this consensus of, but then outside the consensus, as we get closer and closer to an event, there's a little bit of an adjustment. It's the way that traders are pre-positioned in front of the hot zone. Now, that will not be me. I'm not going to be pre-positioned. I'm going to wait to see what kind of pitch the market throws our way. Yes? So that's what we are going to do. Now, you see here the whisper number, the consensus from Estimize, ESTIMIZE. I'm a big fan. This is a free site. There is a paid version of it. They're both fantastic. But this is a site that I spend a lot of time on. 0.2. What does that even mean? It kind of means nothing. It's just a score that we are going to compare sort of the game to, right? We kind of, it's a lot like this is what we expect the score to be when the game is done playing. And if we're wrong, that's where the adjustments come. Now, this is Forex Factory. Notice that the CPI, and that's what I just showed you there, not the core, the CPI is 0.4. I don't know if it's adjusted since 4 a.m., since I was up, but it hasn't. So the whisper number is 0.2. The consensus is 0.4. So there's a group of traders that are thinking, and usually a sizable group, that are thinking it's going to come in a little cooler than expected. That means if it is not a 0.4, but rather 0.3, 0.2, is it a surprise? Not really. There's one other place we can go to look at some whisper numbers. And by the way, there are a ton of economic data release calendar sites. Trading Economics is another one. Econoday is another one. I'll typically take a look at Forex Factory and Trading Economics. So I'll scroll on down to the 8:30, and you'll see here 0.4. Previous was 0.1. The forecast at Trading Economics is 0.3. So you'll notice that Estimize is the very lowest. So where are our expectations? Anywhere from 0.2 to 0.4. All right, so now I've got a pretty good idea of what the market is bracing itself for. This is not unlike earnings whisper numbers, what we think revenue and earnings per share are going to come in at. So got a pretty decent idea. And so the expectations, and by the way, if you're in the Sector Secrets Mastery Room, I like to take notes. I like to keep those notes up on the screen. So the conversation, expectations, levels are all right there. So I'm going to put in expectations 0.2 to 0.4. That's sort of where everything is sitting. People are sitting in there. And this is for CPI, not for the core CPI. This is just for the CPI. We can do the same thing for core, but let's just start with this CPI. That's, to me, where most of the opinion is going to land. All right, now what? Got a pretty good idea of what I'm trading, why I'm trading it, what's expected. Now we can head on over to the charts, and I still have 10 minutes before this economic event hits. All right, taking a look at the charts. Two symbols I'm going to focus on for the most part for this hot zone. One of two, usually it's going to be S&P, no different than what we did for non-farm. Again, the markets can do whatever it wants to do. We are not going to change. We are not going to let the market change what we are, our strategy, right? We're not going to let the market change our strategy. We just wait to see if we get our pitch. So that's going to be the S&P futures and the NASDAQ. Yes, this is a futures trading event, right? This is not about stocks. It's not about options necessarily. It's really about limit orders and looking at two symbols, S&P and NAS. I think S&P is probably the most popular. It's a good way of looking at the middle ground between the Dow and the NASDAQ. Really simple. This is where I let the process of all these years do its job. And that is, I'm going to take a look at the hourly price movement range. Here we go. And where are my zones? This is the S&P. So I'm just going to, this is our 8 to 9 Eastern hourly price movement range for the S&P. All right. And really simple. And we'll talk about directional bias in a moment. But my upper end of the range is basically 41, 48 and a half. 41, 48 and a half. Be nice to get it on the notes. And by the way, my Sector Secrets Mastery folks, if you open up your master link of all the sessions, right, all of our Sector Secrets Mastery sessions, just scroll on down to the Wednesday, May 10 Consumer Price Index Hot Zone session. Just open that up. You'll see all the notes there. Everyone else, you can follow along here on the screen. Okay, S&P 41.48 to take a peek. 41.68 and a quarter. All right. That's the what I call the red zone. The red zone's resistance, by the way. That's the red zone. That's the resistance zone. If I'm going to short, that would be the place to look. On the downside, it's 41.11 and a quarter. And by the way, gang, it's really important to take these measurements pretty darn close to the event. I don't want to do this at 7 in the morning. It's the wrong price movement range that I'd be studying. I need the 8 to 9 a.m. HPMR's hourly price movement range. And then I need the two zones. So what did I say? 41.11 and a quarter. And then I'm going to take that down to 40.91. Okay, that's my green zone. That's support, by the way. That's the S&P. We'll get to directional bias. I'm going to do directional bias. I'm going to take a read of the multi-trend, what the trend is last, absolutely last. All right, so then let's jump on over to NQ. So directionally, we'll do that last. We'll just get the zones highlighted. So once again, by the way, this is a 5-minute chart, and this is the hourly price movement range, which is a historical, gosh, let me get the right spot there. There we go. A historical look at volatility. And this gives us the ability to say, hey, what does this hour typically do? Now, I would expect there to be movement towards the upper end of this range. Looks like it's 1336 to 13,412. Okay, that's the red zone. That's resistance. And then the last zone that we're going to take a look at is the green zone here. Again, I don't think scanning 3, 4, 5 symbols is realistic. It's a lot of risk to do that. Multiple positions and multiple symbols. I think that's incredibly risky. By the way, this whole thing is risky, right? Because we're trading a pretty high impact, intense hot zone. Right? Okay. So then now I have my zones highlighted. Cool. That's the bulk of the work. The last piece, the thing that I'm going to do last is directional bias. I don't want to be open really to either direction. I don't want to say, well, I could be long or I could be short. I'd rather have a preference for the short or for the long. Interestingly enough, the NASDAQ right now is trying to go above Tuesday's closed. That's the line in the sand, right? This is the measurement of whether we're up or down from the previous session. So I would say the Nasdaq is above the line of the sand, and the Nasdaq is bullish. It's not only do I want to be long based on the condition, the market structure of the 5 minute. Do you see these colors at the bottom here, gang? And I hope everyone can see that. All right, the colors at the bottom tell me what the momentum, top row, what the trend, bottom row. So you see I have green over green. That's bullish momentum, bullish trend. NASDAQ is bullish, and not only is it bullish, it's buys only. So that's easy. That means I'm going to place for the NASDAQ limit order to buy in the green zone. So that's going to be, as you can see there from the notes, 13,185 to the 13,108, right? I don't need to put that in there again, right? So it's limit buys only. I'm going to be a buyer only. I got to put that in my platform and type that in. Okay, let's do the same thing for the S&P. The S&P is not quite so clear. Although if the NASDAQ is bullish, it's very difficult for me to be bearish on the S&P, but the S&P is actually kind of bearish, right? The S&P, I could be looking at long or short, and it's actually going to be directional bias for the ES is bearish. That means that the red zone is in play, those red zone levels. It's not going to be buy only, right? The NASDAQ is in an uptrend. That's what tells me I'm only allowed to buy. I'm not allowed to short. But if I do want a potential short and we reach up into the red zone, unless the NASDAQ goes yellow, which it doesn't have enough time to confirm neutral at this time of day, again, doing this at the very last moment, I could be bullish or bearish on the ES, but I'm mildly bearish. We're below the line in the sand. And we have a neutral environment. So there's your line in the sand, far right, daily time frame. There's my line. So this is kind of an interesting situation where it's a little bit different for two symbols that I would prefer to be moving together, right? So a little tricky right off the bat. That's it. We're 2 minutes from the hot zone. Limit orders are placed. We can bracket both symbols. What does that mean, bracket? I can place both the limit orders, the sell limit at the red zone, the buy limit at the green zone. I can place both. I will not place the limit orders to sell in the NASDAQ. I can in the ES because I do not want a wick to get me short the NAS, right? I cannot, again, based on the structure. I can bracket. So normally I'm looking to bracket both symbols. I can bracket, in this case, the ES, meaning place those price conditional orders, those limit orders before the hot zone comes out. We have to take the zone readings well in front, again, not well in front of 1 to 2 minutes in front of the event, because I don't know where those zones are going to be in front of the event until we're 60 to 120 seconds out. You can see it's a pretty simple process. And now I wait. I am a batter now at the plate. You can't see it on my in the background there, but I've got a baseball bat sitting on that bookcase behind me that reminds me I'm the batter here. I'm not the pitcher. I don't dictate what the market is going to do. I react to the pitch that's flying at the plate. And if it's in my zone, I take a swing. If it's not, there's nothing to do. Flat is a important position to accept here. So we're just a few seconds from the hot zone here, waiting on this April consumer price index. I'm bracketed. I've got my limit orders parked. And now I wait. Now I wait to see what's going to happen. So by the way, if you see me looking around on the camera here on the YouTube, I am looking at my other 8 monitors, as well as, hey, shout out to my Sector Secrets Mastery folks. Okay, now we wait. Okay, now we wait. So what happened? We have a high. See, there's nothing really I have to do here. All right, we hit a high of 41.49. I'm short. Okay, I'm short from an aggro level. The aggro is the lower edge. So when I call something aggro, it's aggressive. It's a small position. It's the first opportunity to short. The middle of the range is moderate. The top of the range is conservative. So now I've got a short. And then if I take a look at the NAS, and we'll talk about targets in a moment, my mastery folks, you know what it is. Cut that range like a sandwich, pull that 50%, that pingala, you know that's your target. I am not allowed to short the NAS, okay? Now, nothing I can do with that, all right? I know it may pull back. I get it. The problem is if the NAS is strong, it could have pulled the S&P up with it. Please, gang, remember, this is very volatile. This is very risky. Micros are the way to go. Pen and paper is a great way to start with this process. All right, so now that I've got the ES moving, the idea here is, if you recall, we had that 41, 48 upper end. And so I'm just going to look at what the halfway mark in between those two zones should be. Ideally, I actually should have done that before the hot zone, but it's easy enough since you have the numbers. Take the high to low range, cut it in half, and that's it. That's it. Now, what I can do, there's a couple things I can do here. For those of you that want to slow this process down, let me show you a couple choices, because at this point, there's nothing left for me to do. If you want to slow this process down, meaning you want extra confirmation, a really cool thing is to place don't place the orders and wait for a minor high or inside candle on the 2-minute chart, Okay. Now, by the way, as you can tell, I have no idea what the CPI number is. It's actually the last thing on my mind. All right. It's actually the last thing on my mind. I don't really care what the number is, other than where is it in relation to the discounting. Obviously, there's a little bit of a shock. You can see by the size of the candle. It came in at 4.9. And again, remember where we're expectations. Let's see. That's the CPI 4.9 year over year. That's not what I need. Let's jump on over to, again, this is how almost insignificant the actual numbers are to me. So let's jump on over to Forex Factory. All right. And if you notice, I'm going to refresh this. And let's see what we got. And again, there's nothing for me to do other than just sit. So, a watch pot never boils. I know what my risk is. So my CPI came in at 4.4. That's the number I'm looking at. I'm not looking at the year over year, although it's down a tick. That's moderately bullish, because if inflation is cooling, the Federal Reserve gets a CC, it's working, and that would be fairly bullish to the market. But CPI came in line, as did core. No, core came in a 10th hotter. Wow, that's interesting. Okay. Now you might say, what is the point of that? Is this an indication that we're seeing inflation cooling? If you take a look, if you're wondering, Rock, how do I see the trend of this? Right? Let me show you right here. Here's a trend, and we can go back to, this is September of 2022, right? I mean, the most obvious trend in the world is that inflation's coming down in that regard. See that? That's a graph of it. That's a graph right there. So yeah, inflation's coming down, but that's not enough. That's not enough, is it? So the next thing we can take a look at, when I say that's not enough, what do I mean? Data, when we take a look at year over year, is you can see the trend year over year. But remember, the game that's being played right now in an intraday chart is very much, what do we expect versus what do we get, right? What do we expect versus what do we get? And that was very much in line. And it's obviously higher than the previous. There's two trends at work here. This is sort of year over year slower trend that emerges on a year over year CPI graph, like I showed you. And then there's this one. This one's a very different story. So remember, it's not just the trend, because that trend's pretty darn clear. It's just stair-stepping lower. And it has been for some time. How long? When do we peak, according to this? Yeah, so July. And since July of last year, we've been heading lower on that year over year CPI. By the way, I should mention, this is not the Federal Reserve's sort of favorite inflation metric by any stretch. It's actually the PCE that they like a lot. All right, so I've got my short here, and now I'm going to ask myself, where should I take profit? You know what I'm going to do here? I'm going to utilize I could cut the range in half like we talked about, but I see that there's some interesting anchored VWAPs on this chart. I would not mind a 4140. That might be a little bit lower. Another target a little bit lower could be 4137. There's nothing to do here. Now, I can limit my risk now. Let's talk about risk. Where the market goes from here, I cannot control. The only thing that I can control is my risk. So let me get my journal out of the way here. All right. So now what I've got to do is I'm going to limit risk. Okay. Now I've got an ES short, and I can see that the high we punched up to on the data, right? The high was 41.52 and 3/4. Right? Again, for those of you that are pretty comfortable using the hourly price movement range zones, you know that all we have is at aggro. So 41.52 and 3/4. Let me double check. That was the number. Yes. I can place a stop. I can place a stop loss. I would say 1.5 points. I'll go 1.5 points. There's no magic to how much room I'll give that high, but I can place that 1.5 points. The other thing I can do, so it's less sort of a random choice. Let's jump on over here to the trading view charts. And I'm going to pull up the 7 to current volume price, the volume levels, our volume profile. This is price derived volume. In other words, how much volume took place at a particular price. It's pretty thin. It's pretty thin beyond. Okay. And this is not that there's no volume there necessarily. It simply means this is what I'm getting from TradeStation. All right. So I'm going to place a stop 1.5 points above that high. And that's it. So if I'm wrong, it's going to be just a paper cut. I don't like to be wrong. So especially when I've got hundreds of people watching. But this is the game. This is the game. And no, I'm not going to add to the position. I'm not going to do any kind of fancy footwork, defend it, all those kinds of things. Either I'm right or either I'm wrong. I like trading to be very, very binary in that regard. So either it comes down or it doesn't. I'm a little disappointed that it did not come down right away, because what we like to see is a snap up and then an immediate reaction to the overreaction, right? The retracement is typically a reaction to the overreaction. This is a large candle. Another thing we can do, just again, all the different choices we have for targets. 41.40.5 is cutting that range, that single candle of reaction in half. That's fine too. You'll notice that it does line up in that same vicinity of that anchored VWAP that we have there. That's it, gang. That's all I'm going to do. Very, very odd sort of reaction here. I don't like being short a quiet market. So again, all the more reason to tighten up that stop. Again, the real gem of this setup is get that quick wick. That's typically an overreaction, and then we snap back. We're not. So when a market goes quiet, it's a little bit more beneficial to the bulls. As they say, don't short a boring market, don't short a quiet market. In this regard, it's kind of quiet since that move to the upside. Clearly a lot of confusion. Now, where else can we? So I know where my stop is. That's it, right? So let me show you where this lands from a macroeconomic standpoint, because that's really why we pay. We don't have to trade this hot zone, right? I like to put some size, not size, I like to, if somebody asks me what size am I using, it's usually half of my normal size for a hot zone. All right, so then what I'm going to do is move on down to the Fed Watch tool, because this is where this lands. This is where it's important. Are we still expecting a hold in June? Yes, no question. We're still expecting a hold in June. Once we reach that 80% level, that's pretty much what we would quote unquote call fully discounted, right? Okay, so then now, bear with me. All right. So now I'm going to go out to July. Hold. Yeah. There's still a sort of a 14.4%? Yeah, 14.4% expectation, maybe of a hike, very minimal. And then a 25% possibility of a cut, again, minimal. Most expectations, the largest the largest possibility is to hold. Okay. Now, November and September are where things get exciting. We are seeing now the 25 basis point cut, a quarter point cut, is starting to make a little bit of headway against the hold. Again, any column right now, since the current rate is 5 to 5.25% or 500 to 525 basis points, anything left of that column represents a cut. So September starts to show the possibility for a cut. Now, here's where November is really telling. November is 100% expecting a cut, which is synonymous with that Fed pivot. So if we wonder what's going to happen with this, right? The Fed pivot here, by November, if we are not getting messaging and or really more specifically action from the Federal Reserve that is a cut, November data is basically communicating to the Federal Reserve, we will have a tantrum. We are expecting you to change your tune. We're either expecting a recession at this point in time where you have to cut, Jerome, or we're communicating to the market for whatever reason, this is where you need to pivot. Whether this happens or not is irrelevant. This is not about predicting using these macro data points. It's more about seeing what we collectively are expecting and communicating to the Federal Reserve. Believe me, when in the hollowed halls of the FOMC, they know where this is sitting, right? So I've got my point and a half stop. So that means at this point, game over, done, right? So I risk 1.5 points above the high and am now stopped out. That's it. I kind of oddly like when I get, I know it's kind of weird, but I oddly like when I get stopped out doing this because I can remind everybody two things. This is a very risky way to engage the futures markets. And two, gang, I think a lot of folks ask me, well, what about this? And no, gang, it's over. That's it. Put a quarter in the machine. The ride is done. Take the loss. Now, I'm going to go back and we have a few 2 minutes here. I'm going to do a little trade analysis. S&P, the problem really here was the NASDAQ was strong. So if someone says, Rog, what are some of the warning signs about the S&P probably moving higher? This thing, right? And we talked about that. NASDAQ was a buy only. Aren't I glad I didn't step in front of this freight train? I simply was not allowed because shortly after 745, the NASDAQ took on an uptrend. The NASDAQ is going to be hugely influential on the S&P. So in many ways, could I have kept a buy or nothing attitude with the S&P? I could have, but again, this is a risky environment. I'm willing to take a shot with smaller risk, smaller size, and that's it. That's it. That's all I'm going to do. So ultimately, there was only a buying opportunity on the NAS, and I take a lot of pleasure in the things that even if I didn't do, that the analysis put me in the right direction. And the analysis could have said, Rog, why on earth are you going to short the S&P if the NASDAQ is in an uptrend? Granted, all I was looking for is a quick snap back, 50%, halfway mark, as I like to call it, the Pingala. And so I wasn't looking for a downtrend and dramatic move lower, but the NAS really is taking charge. So that would have been a pretty good filter to say, let's not short the S&P. We could have been buy or nothing on both of them. But the directional bias of the S&P opened up the short. The NASDAQ did not. I am unbelievably happy the NASDAQ said, you cannot short me, right? And I'm even somewhat happy that if I wanted to have a more stringent set of filters, the S&P could have said, look, I go where the NAS goes most of the time. Look at my weighting, Rog. I'm weighted at the same stocks in the top 5-6 spots. We share the XLK. We share this NASDAQ tech sort of correlation. And that's it. That's really it, gang. And I think for a lot of traders, pulling the trade is the hardest darn thing. I'll tell you what I hate to do. I hate losing money. But as much as I hate being stopped down and losing money, I hate losing even more money than my plan allowed. So that is the CPI. That's the effect macroeconomically. That's the trade that I had. I took the one that I could take advantage of and game over. That's it. Now, what's really cool is this should set up an echo for the morning. This should set up And it's looking like we're pretty clear on this. This should set up a pretty clear bullish bias for us at 9:30. Even the Dow is trying to go into an uptrend now. So the Nas was in an uptrend, the S&P was neutral, and the Dow is just now trying to go into an uptrend, but it has not completed the process. But we've got 45 minutes. And if we can see that the steadiness of this higher high and higher low continues, we'll inherit an uptrend on the open. And then it's really easy. It's a buy only situation, whether that be the hourly price movement ranges, whether that be VWAPs. That now becomes a whole lot easier rather than we could be bullish, we could be bearish. We can definitely start to focus just on the long side. Having directional bias is really important. I hope you see that that's what kept me from shorting the Nas, and ultimately, yeah, in some way I could argue now, kind of playing, Monday morning quarterback on myself, saying, Rog, if the Nas was strong, the S&P probably had a slightly less chance of moving lower. That is the game. All right. And then at the same time, if we're getting risk appetite, I'd really like to see a couple of other things. When I see you all back here at the YouTube channel or wherever you're tuning in from, Facebook, YouTube, shout out to my folks on Twitter. We'll talk about the aftermath, what this means to euro, what this means to bonds, and then what I will prepare for on the open. All right. That's it. Know your risk. Have the discipline to take it. What that does is free up quite literally mental capital and physical capital, and we can start with a clean slate at the open. Hope that was helpful. I like to be as instructional and transparent during these things as possible. People always say, Rog, don't you get a little, nervous trading hot zones? Reduce your contract size by going to a micro, fewer contracts, or simply accept there's a high heat hot zone and it's not something you have to trade, right? But I love to sort of stress test my tools with you all in the room. And the one that really shone was that multi-trend, the way in which we look at momentum and trend before we take any kind of trade. I'll see y'all in Charts and Coffee at the top of the hour. All right, gang, that's a wrap. Be good to each other.